Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, being Tuesday, we will be looking at the US market open. We'll try to understand what has been happening in the markets over the week, as well as earlier in the day. And once we get that down, then we'll be able to focus on what to expect on the New York session open. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So first things first, we know this week we don't have a lot of important news that cause a lot of volatility. We had most of that in the last 2 weeks. So the key focus for the week is on the S&P Global Flash Manufacturing PMI, as well as the Flash Services PMI. So there seems to be a key existing trend right from the data that came in earlier this morning, where Australia manufacturing PMI was at 48.0. So we know how the indices are plotted. So any number below 50.0, it's indicative of contraction, and above 50 is expansion. So manufacturing is currently contracting in Australia, whereas services are expanding. They're above 50 at 51.8, but this is a slowdown from the previous number of 53.7. So fast forward, we also had Japanese manufacturing PMI, which came in at 50.8 versus 49.5. So it seems like Japan is moving in the right direction, whereas inflation moved higher to 3.0%. So looking at the Eurozone, there was a big surprise here, where manufacturing really slowed down to 44.6. This is much faster than expected. And also services were expanding at 55.9 compared to an expectation of 55.4 and the previous reading of 56.2. So there's a slight slowdown in services sector, but still within the expansionary territory. So you move to the UK, you realize it's a similar thing. Manufacturing is getting weaker from 47.8 the previous month to 46.9 in April. Then also for services, yes, they're in the expansionary territory, but they are slowing down. So from the previous number of 55.9, expectation 55.5, then we had 55.1. So it seems like an existing trend where manufacturing is weakening, but services are currently very strong. So now that we have had this sequence of data releases, the next one, which is the most important one for the day, is the one for the US, where manufacturing has remained above 50.0. So in the last reading, it was 50.2. So we'll be expecting a reading of 50.0, which is kind of indifferent. It's neither expansionary or contractionary. And then for services, they were growing well in the previous month, 53.6. So we'll be expecting 52.6 reading or something close to that. So if there's a slowdown in services, then this will be indicative of the Fed basically achieving its targets of slowing down the economy and slowing down the inflation. But then if there's a big spike in services and also manufacturing, then this will be bad for the US, since the Fed may have to go ahead and do another rate hike. So every data point we are getting, especially for the US, has a direct impact on the decision that the Fed may make in its next meeting. So we'll also be looking at new home sales data from the US at 5 p.m. Previous reading was 683K homes, and now we will be expecting a number around 665K homes. So the Fed's target is for the real estate sector to also slow down. So if the number is lower than expected, that will be good for the Fed. But then if it's a big spike upwards, then that's a big problem for the Fed, because it may have to go for another rate hike on its next meeting on the 14th of June. So with that in mind, there's a brief focus on what you're expecting tomorrow. There's a New Zealand retail sales happening very early in the morning, 1:45 a.m. Then at 5 a.m., we'll be having official cash rate, as well as the monetary policy statement from the Reserve Bank of New Zealand. So the Reserve Bank of New Zealand, or RBNZ, is expected to hike interest rates by 25 basis points, eventually moving interest rates from 5.25% to 5.50%. And these would make it the most aggressive central bank among the top economies. And this may have a very positive effect on the New Zealand dollar. So later on, we'll be looking at CPI in the UK at 9 a.m., core CPI year over year. So we expect a big drop here from the previous reading of 10.1% down to 8.2%, meaning that inflation is dropping as expected. But as we all know, the Bank of England is not doing enough to control the high inflation. The number is still way too high. So later on, we will look at the retail price index as well as a producer price index, which are all measures of the price level of, or basically inflation within the UK. So later on, a speech from Bank of England Governor Bailey at 12:30. But then by the time we get here, we will have done the next session, which will be the market snapshot series tomorrow at 11 a.m. So there'll be another speech still by the same person before we look at the FOMC meeting minutes. These are expected to cause some volatility, especially in USD pairs. Then preliminary GDP for the US on Thursday, before we look at more CPI data from Japan and core PCE price index for the US at 3:30 p.m. on Friday. So towards the end of the week, we also look at preliminary wholesale inventories, as well as revised University of Michigan consumer sentiment expectations, as well as inflation expectations. So that's a brief overview of the week. The other key thing to note is that the big highlight of the week is the US debt ceiling negotiations. So they're currently ongoing, though not quite successful. So with the negotiations going on, there's that risk that the US could default on its obligations. And this could happen as soon as the 1st of June, which is basically about 7 days from now. So within this period, there seems to be some form of uncertainty happening in the markets because there's two major outcomes that could come out of the negotiations. So the first outcome is the best one, where the US basically expands the debt ceiling. But then if it expands the debt ceiling, then the US will need to have money to expand spending. And one of the ways to do that is basically by selling bonds. So if it happens to do that, then that will have repercussions in the markets. And also, on the other hand, if the US doesn't raise the debt ceiling, then its credit rating could be downgraded. And as a result of that, we could see bonds nuking. And also, we could see the stock market selling off out of panic. So those are some of the key considerations that could happen within the space of the next 2 weeks. So now that we are done with that, it's time to look at the dollar index. Clearly, it has made a really good recovery both yesterday and today, basically outdoing all the retracements that had happened on Friday. So Friday, you can see the dollar index hitting this high here of 103.459 before dropping all the way down. But yesterday, there was a struggle to rise. But eventually today, we saw the dollar index recover to that price level of 103.459. And now from the previous 1 hour, it seems like the dollar index has actually broken to the upper side. So there is a good chance that we will be seeing the dollar index continue rising. Also, we all know that these kinds of patterns sometimes will have some form of pullback. So if you think of this as a cap, then there's a good chance that we could be seeing a handle. So this is on the 50-minute chart. So let's try and look at these. So normally, whenever you have a pattern such as this one, it's quite common to see this. And this is usually taken as a as a continuation pattern. So if this was to happen with the dollar index, then it means that this area could be acting as the resistance. The market pulls back down and then goes up. And that's a normal and natural expectation, especially for these kinds of setups. So that's one of the key considerations here for the dollar index. So with the dollar being this strong for the entire day, then it has implications for the major currencies. One of them, we have seen the pound USD shoot all the way down. So I remember in the morning when we were doing the snapshots, we saw the pound USD dropping sharply here. And of course, you can see the preceding hours, the pound USD kept moving down lower. So we are yet to hit the major support level. So there seems to be a line around 1.23496, which was acting as a support area previously. So lots of liquidity could be tapped here. So there's a good chance that the market may push down lower. So for New Zealand USD, there was a very nice and strong rejection here. And as I mentioned, we're expecting data from the Reserve Bank of New Zealand as early as tomorrow morning. So when this happens, then there's that expectation that the New Zealand dollar could strengthen against other currencies. So for the US dollar, I expect this bearish momentum to continue going down up until we get to this particular trend line here. And then from here, perhaps there will be a setup to trade much higher on the announcement of interest rates tomorrow. So this is an area of interest. So the price level is around 0.62226. So 0.62226 seems like an area of interest. So if the price keeps dropping and gets to this area, then it will be a nice area to observe the price action of New Zealand USD as we expect the interest rate hike to happen tomorrow. So for Euro USD, clearly there was a very nice rejection of this area here. So in the morning, we saw this price action happening and the market eventually dropped very close to our target of 1.07602. But then there seems to be a very strong dollar and we could be seeing some continuation along these lines. So far, the Euro USD is testing a key level support. So this is a support that we saw last week happening to be the bottom. So observing this level will be very important to see whether there is a bounce or a continuation. So chances are the euro will continue losing to the dollar. So for USD CAD, we had our best pattern for the day. The market trading inside this triangle, ranging, eventually making a very nice breakout in the morning, but this breakout did not last for long. So as you can see, we had 3 proceeding candlesticks before we saw the market pulling back downwards. But this is completely normal. So we know that whenever there's a huge breakout, sometimes the market will make a breakout, retest the area before continuing. So it's a very common theme, especially for breakout traders. We know that the market could always retest the area before making a major move. So there is a good chance we'll still be seeing the market move in that direction. So it's an issue of just observing the price action around this area to see if something comes out of it. So if you see signs of bullish entry, then that might be the signal. And also, we had a very nice discussion around the Brent oil prices. So in the morning, the prices were pulling back down, but we mentioned we are looking for signs of bullish entry. So if you manage to capture these, well and good. It seems like it was a key book pattern. It's what we describe as a morning star. So after this, there was a very nice rally. And as you can see, as the market approached the upper trend line, there seems to be some form of rejection already happening right now. So if you had bought this particular asset on Monday and you held to this point, then congrats. This was a really nice trade to trade from this support level. And now it's time to look for an exit. And then we observe the price action to see if there's signs of some further upside momentum, or if the market goes all the way back down to the lower trend line. So there seems to be a lot of positive news on the oil side, but also when you look at the manufacturing PMIs for some of the major economies, they're indicative of a very weak demand side on the oil markets. So if there's a weak demand, then we expect lower prices. But then also we have not yet seen the manufacturing PMI for the US. So that will be very important, especially in determining whether you have a break here or the market pulls back down to the lower trend line. So for USD CNH, this is important. So we saw the dollar make a very impressive rally against the Chinese yuan. And what we are seeing here is the market basically making some good recovery, almost a vertical momentum. And I expect this particular trend to continue as long as there is a key divergence between the two central banks, where the People's Bank of China is not raising interest rates anytime soon, but then the US has been hiking consistently. And as a result, you expect one currency to be consistently stronger than the other. So it's the same story on USD JPY. So if you look at USD JPY and you zoom out to the daily chart, you can see the recovery here and also the recovery here. So for the cup and handle pattern, it was completed. So for those who are very new to the cup and handle pattern, then you'll notice how this played out. So market basically forming a U-shaped pattern. So I just wanna illustrate the same. So this is what we had here. So that was the initial point of the cup. Market goes back down and then forms the handle. And then for the idea I just shared about a retest. So market moves up, goes back to retest the breaking point, and then accelerates higher. So it's quite a common theme whenever the market is breaking out of a common pattern. So now that we understand all that, it basically means that for USD, again, it's the Japanese yen, the breakout happened, the market retested, and then went higher. So the expectation is that the price will keep pumping higher. So now that we are seeing price pulling back down, then the idea is now to look at short-term price patterns to identify where the opportunity lies. So we could be seeing something playing along this path here. So if there's a drop, then the idea is to look for a buy area, especially on the support level of 137.755. So that being mentioned, I'll also be taking questions today. So if you have any questions or comments, feel free to type that in the comment section and I'll be responding to that right away. So hi, Geoffrey, hi, Rita, Joseph, Philip, Edward, and Emma. Thank you, guys. Thank you for your responses. I really appreciate these. So on to the next chart, US equity indices. The S&P 500 has strongly rejected that resistance level. So I remember mentioning that this particular pair was trading in a diamond pattern. So you can see the 4 trend lines here. So market expanding through the diamond and then contracting, eventually breaking to the upper side. But the break did not last for long because we had a major resistance level. So the major resistance level is along a daily trend line here, where the market tested several times and was unable to break. And since that period, and which was Friday last week, we have seen the market pull back downwards. So yesterday, an attempt to go up failed, and today, another attempt to go up failed. And what we are seeing is the market pulling back downwards, which means there is an expectation now that the price will keep going down. So some of the key levels to watch are the current price level here. So the market is almost reaching a level that was acting as a resistance, but now is a support level. So a price level of 4,172 seems like a nice area to observe, see whether there is signs of continuation or even bullish entry. So yet we have not determined the direction for this. So it's a wait and see kind of scenario. So there is a lot of similarity. You can see the double top formation happening in the NASDAQ or the US Tech 100. And also for the US 30, this is one that has been the weakest among the three, and this one has already accelerated downwards. So clearly from Friday's price level and then these weeks, there seems to be a very strong momentum movement towards the lower side. So in this case, I would say that the Dow is the most bearish among the three. So judging from this, you can already see a price pattern beginning to emerge here. And there's a good chance we'll be touching this lower trend line within this week. So I'm hoping I've covered everything from top major indices to oil, major currencies, and lastly, we have gold. So gold, we have a very nice trend line on the lower side here, a very nice trend line on the upper side. And clearly, what we are seeing here is a bottom that held very well. And now gold drops to the same level, finds support. You can see the long lower tails indicating rejection of lower prices. Very strong bullish entry here from the current candlestick, which basically implies that we could be seeing an acceleration in gold prices. And this could lead all the way up to yesterday's high around 1983 price level. So there is a good chance we'll be seeing gold make a very strong rally towards 1983. So you just have to observe and see. Awesome. So since there is no question currently, then I would like to go end the presentation here. So I don't think there's any breaking news so far. with just the normal updates from central bank governors, especially in the Eurozone, as well as the UK, but nothing much is happening. Yeah, there's just one commentary here. I think just came a couple of minutes ago at 4:14 p.m. So US Treasury has asked agencies if payments can be made later. And this is now a big problem. It's a big risk that people are considering. So the fact that the US Treasury is already finding hardships in paying its bills and basically asking agencies if it can delay payments, now this is something to get worried about, because if this starts having a spiral in the US economy, then we could see outright panic happening. So it makes sense to consider those shorts in US equity indices. So according to two people familiar with the situation, the Treasury Department has asked federal agencies whether they can make pending payments at a later date as senior Biden officials look for new methods to save money and keep the US government from going into default. So thank you very much, guys, and I hope to see you on the next one. Hello, J Squad. I think you joined in late today.